We all know money makes the world go round, but there are actually different types of wealth that everyone needs in their lives, and today we are going to go through each one so you can see if you are missing anything. This is an important topic because you can't achieve financial freedom without these low types of wealth, so make sure to watch this until the end. Number E, liquid wealth. We'll start with liquid wealth, which is cash and cash equivalents. It's basically any asset that can be turned into cash within 24 hours with little effort. The best example of liquid assets is savings accounts, checking accounts, money markets, treasury bills, etc. Liquid wealth is what you use for emergency situations or when opportunities arise that require a quick capital injection. For example, let's say your car breaks down. If you have liquid wealth, you won't have to borrow money or use a credit card to pay for the repairs, you just pay for it from your savings. Similarly, let's say you want to buy a house. Having liquid wealth will mean you can make an offer on a property quickly without having to wait for a mortgage to be approved. Or let's say you want to take advantage of a unique business opportunity that arises. If you don't have any cash available, then unfortunately you'll miss out on this opportunity. This is why having liquid wealth is crucial. Without it, you might find yourself in a position where you have to borrow money or use high-interest credit cards when a genuine need arises. The general rule of thumb is to have 1 ounce of living expenses stored in a bank account at all times. This will ensure you can handle unexpected events and still meet your financial obligations. However, the amount you need depends on your individual circumstances. For instance, if you have a stable job with no dependents, you may feel comfortable with 3 months of living expenses in your liquid wealth. On the other hand, if you have a volatile income or dependents relying on you, 6 months or more might be a better choice. Hard assets. Next, we have hard assets like real estate, precious metals and commodities. These assets have physical substance and they have historically been used by wealthy individuals as a way to protect and grow their wealth. Hard assets can provide many benefits. First, they can act as a hedge against inflation since their value tends to rise when the value of currency falls. Second, they can generate income. For example, real estate can provide rental income, while precious metals like silver can be leased out. Third, they can serve as collateral for loans. Lastly, they can be passed down to future generations, ensuring wealth preservation over time. Now, let's talk about some popular hard assets. Real estate is often considered a safe investment and can generate rental income. Land is another option that has historically appreciated in value over time. Collectibles like fine art, classic cars and rare coins can also be good investments. Just remember that collectibles can be illiquid, meaning it might take time to sell them for cash. And finally, there's precious metals such as gold and silver, which have held value for thousands of years. They are often seen as a safe investment during uncertain times and can be used as a way to diversify your portfolio. While hard assets can be a great addition to your wealth portfolio, they do come with some challenges. They tend to be less liquid than other investments, meaning you might have trouble selling them quickly if you need cash. Plus, they usually require some level of expertise and knowledge to invest in them effectively. For example, buying and managing rental properties requires significant experience. Similarly, knowing how to spot valuable art or coins takes a trained eye. That being said, if you're willing to learn and do your research, hard assets can be a great way to build and preserve your wealth. Number C, financial assets. The third type of wealth is financial assets. This includes things like stocks, bonds and other securities. Unlike hard assets, financial assets are intangible, meaning they don't have physical substance. Instead, they represent ownership in a company or a portion of a loan made by an investor to a borrower. Financial assets can be great for building wealth because they have the potential to generate income and appreciate in value over time. For example, stocks represent ownership in a company. When you buy stock, you're essentially buying a small piece of that company. If the company does well and grows, the value of your stock will increase. Additionally, you might receive dividends, which are payments made to shareholders from a company's profits. Similarly, bonds represent a loan that you make to a borrower. When you buy a bond, you're essentially lending money to a company or government. In return, they pay you back with interest, but it's important to remember that every type of wealth comes with its own set of risks. With financial assets, there's always the possibility that a company may underperform or even fail, which can lead to a loss of investment. That is why it is important to do your research and only invest in companies that you trust and understand. Diversification is also key, which means investing in a variety of assets to spread out the risk. This can help cushion you against losses if one investment doesn't perform well. Number 2. Business equity. Next, we have business equity, which refers to the value of your share in a business. This can include the value of your own business or the shares you own in a company. Owning a business can be a great way to build wealth because you have the potential to generate income, receive capital gains, and benefit from the growth of your business. For example, if you own a bakery and it does well, you'll generate income from sales. As the bakery grows, your ownership stake increases in value. Additionally, you might receive capital gains if you decide to sell your business. Of course, owning a business also comes with its own set of risks. Businesses can be risky ventures, and there's always the possibility that a business may fail, leading to a loss of investment. That's why it's important to carefully consider the market demand, competition, and financial projections before starting a business. Having a solid plan and seeking professional advice when needed can help mitigate these risks and increase your chances of success. No. Intellectual property. Our fifth type of wealth is intellectual property. This refers to creations of the mind, such as inventions, literary and artistic works, designs, and symbols. Examples of intellectual property include patents, trademarks, copyrights, and trade secrets. In today's world, intellectual property can be a valuable asset because it can generate income and increase a company's value. For example, a new invention might lead to the creation of a successful product, generating revenue for the company. A strong trademark can increase brand recognition and customer loyalty, leading to increased sales and profitability. Similarly, a copyright-protected work like a song or a book can generate income through licensing and royalties. Building a robust intellectual property portfolio takes time and effort, but it can be a great way to secure your financial future and build long-term wealth. By protecting your creative and innovative work, you can reap the rewards of your hard work and potentially create a lasting legacy for yourself and your family. No. Human capital. Last but certainly not least, we have human capital, which refers to the economic value of a person's skills, knowledge, and experience. This type of wealth is crucial because it can help you secure a better paying job, start a successful business, and contribute to society. Investing in your human capital can lead to increased earning potential, career advancement, and personal fulfillment. By expanding your skill set and knowledge, you become more valuable to employers or clients, which can lead to higher paying opportunities. Your reputation and credibility also benefit from continuous learning, positioning you as an expert in your field. Moreover, developing your skills and expertise can lead to greater job satisfaction and a sense of accomplishment. Pursuing intellectual and professional growth can be personally fulfilling and empowering. There are several ways to invest in your human capital. The most obvious way is through education, whether it's a college degree, a professional certification, or a trade school program. Education can provide you with the necessary skills and knowledge to excel in your chosen field. Another way to invest in your human capital is by gaining work experience. Internships, part-time jobs, and volunteer work can help you develop valuable skills and make connections that can lead to better opportunities in the future. Additionally, networking and mentorship can provide you with guidance, support, and opportunities that you may not have otherwise had access to. Remember, investing in your human capital is one of the best investments you can make. It can lead to greater financial security, career advancement, and personal fulfillment. So make the commitment to continuously learn, grow and develop your skills and watch your wealth and success grow along with it. So there you have it. The little types of wealth that everyone needs. While we can't control external factors like market fluctuations or economic conditions, we can focus on what we can control, our own actions and mindset. By cultivating the right habits and mindset, we can position ourselves to take advantage of opportunities when they arise. Do you have any thoughts or comments? Please leave them down below, and if you found this video helpful, please consider subscribing. Thank you for watching.